Okay. Um, Welcome to the third episode of my route to financial freedom through United States Stock Exchange. um, I didn't really script what I'm going to talk about in this episode, so yeah. Okay, so the changes to the portfolio, life situation, stock that I picked, and technical analysis, of course. So, um, what did change? So, a month ago, I found a job, and I've been employed for 1 month, basically. I didn't create an episode in April, right? Due to personal life challenges. I'm not going into that. But I'm still employed, which is fine. I didn't get kicked out of the second company, but I'm trying to find another job, basically to become employed 2 times on a business basis. Meaning, I'd like to start a business and get employed on a contract, and it's actually harder than I thought because I lose interest because my current job is pretty demanding, time demanding, and I do a lot of stuff there. It's not like my previous corporate job when I did something every day, but it was like 1 to 2 hours, and then it was slacking and joining some ridiculous and totally unnecessary meetings regarding projects that don't really move forward. But yeah, that was the reality there. And actually, I was employed hybrid. So, but I got like medical issues with my body, and I had full remote employment for like 2 or 3 years, but then they started to say that we can have that and you need to go back to hybrid. And when I did, they basically liquidated my position. And now, what I'm hearing from my colleagues, they are returning to the office like full time, like 5 or 4 days a week, because in my country, 1 day a week working remote was like it was okay before COVID. You could do that. Um, so yeah, so it's okay. I think my financial situation is okay. Why did the portfolio increase its value substantially? And the answer is gains, of course. No, not really. The answer is, of course, my severance pay that I got from liquidated position at my previous job, and because of that, um, and because I found a job pretty quick, and I'm also a very frugal person. I don't even have a car. I'd like to buy a car right now, but I'm looking what's on the market, what cars are offered, and this is gonna be like 20-year car that I would like it to be in pristine condition. So yeah, uh, we'll see how it goes. So yeah, severance pay, and we've also we're back, baby, right? Oh, we've been like here, this downtrend, this this up and down movement that basically was to bore everyone that's in the market and liquidate everyone that's leveraged, whether it be long or shorts. They're just throwing off the weak hands, let's say it. So weekends, the leveraged players, because if you held stock, you basically don't care. It's just boring to look at, and But if you're leveraged, you're gonna get beaten like a potato. And so if you come back to the balance zone, I don't know if I've talked through what's this blue rectangle. I hope it's visible. There is like a rectangle here. I hope you can see it. And what's this rectangle? It's an initial balance zone um, that I've picked. And this could be picked, of course, in different place, but this was pretty important because it was above this trading, um, let's say seasonal, like this 25th February Trump liquidation tariff disaster. And as you can see, we've traded here up and down. And when we came back to this, it was held very strongly, and market reacted from it. And as you can see, this happened also some more times, meaning there's a buyer here. There's buying power. The the um, the market orders are in unfilled here, meaning short orders, buy orders that were here didn't got filled, and those people need to move their orders up and buy at a higher price, which forces the market upward. I hope it's easy. I think it's easy. When the price doesn't come down, it means there's so many buyers here that they lift the price, and the sellers are able to sell at a higher prices for they offer they offer at higher prices for anyone that's willing to buy. And if they don't need to sell it at lower prices, if you run a shop, you don't want to sell your products, I don't know, you sell shoes, you don't offer shoes at the lowest price you can give the customer, you want to earn money on it, right? And this happens with the market also. So basically, consolidation, the balance zone, price came back, it was upheld and bought up, and it was tested 2 times. And as you can see, we've dropped to this level, and we did what's called test. And I forgot. Sorry, I forgot the word how it's called. Um, Look below and fail. Okay, so we looked below this target, this end of this balance zone at 229551 or whatever. In futures, this is gonna be different. On index, it's gonna be different. And look how violently it was bought up. And this is this pin bar, yeah, right here. Look what happened. The price went lower. It tested, you know, and the buyers came in, and this happened also next 3 days. Price went lower, and the buyers came in. Someone was buying here, and don't look um don't look at this price action like I'm predicting the future, or I don't know, I've said that it's gonna come here and it's gonna be bought up, and it's gonna, and the buyers will come and they will support the price and it's gonna spring out and all-time high. I don't know this. But one thing I know, that there was a balance zone here, and I saw that when we came too close to it, the buyers came in, and now after the fact, I can see that it was supported with the buyers, and buyers came in. So if there's buyers, the price is gonna go up, right? Because there are willing buyers to buy the product on a higher prices. Those guys didn't think about oh, I could have bought it here. I could have waited a little bit more. This was the only place to buy the stock, and now I should wait for 3 years for another liquidation, another stock crash, another, I don't know, Lehman Brothers, whatever. No, it's bullshit. You have to act really fast on the stock market, and it's not even that fast. Look, this is 3 days, but if you cannot get the best price, you have to pay more. You have to take more risk. That's okay. That's okay. So yeah, and as you can see, we've punctured the other zones of profit, and we've punctured and we broken through the sellers that were here, right? In this consolidation, this huge liquidation zone that we've been here for months. And yeah, and it was basically as liquidation and accumulation at lower prices, because even if you bought here without leverage, or maybe there are probably people that can buy futures without leverage. Think of this like that way. Someone has like 680 millions of dollars in his bank account, or his brokerage account. Does he need to buy leverage to buy 10 contracts, 15 contracts? He can even trade micros. I mean, it's probably he probably doesn't with that much money, but if he's down like 50,000, this is nothing for him, right? So there are players with a huge amounts of cash, and they don't leverage themselves like we do, having a $10,000 account and buying one a mini, or six micros or whatever. They can withstand it. And if you bought even here, if you bought here, right, at this accumulation, there's buyers here, you can see that the price was going up and going up, and you could survive this, and you're in the money, you could earn a lot. So yeah, the portfolio is like 10% up, I think, maybe a little bit more, because I hold a lot of stocks. I basically try to mimic the QQQ, the Nasdaq 100 index, basically cherry picking the best stock I think there are in this market. So it's like 40 of them, and they are also from S&P 500. I've researched like 100 stocks from Nasdaq, and like 250 from S&P, and of course both stocks are stocks from the Nasdaq are in S&P 500 also. So yeah, so it was probably like 200 stocks, I think, and I cherry picked the best ones through various methods, and it's actually outperforming S&P 500 by like 5%, 5 to 8%. It depends. It of course has more liquidity, volatility. Sorry, it has more volatility. So when the market drops, and the stocks lose a little bit more than S&P 500, but I'm fine with that. So what now? As we can see, there are some down candles forming, and we've broken through those, but you can see that the seller is coming. The sellers are coming. This doesn't mean we're gonna stop and we're not gonna get any higher, but it can signify that that the music is slowing. So what can the market do right now? And I'm not gonna predict 6 months from now. I'm gonna predict, try to predict a week ahead or whatever. So these guys need to be thrown out of their position, and their money is gonna be taken. How? By moving the market up. So we're gonna liquidate those guys by moving up, which we are doing right now. And when those guys are out of their positions, we're gonna consolidate a little bit, I think, because this is a significant movement. But I'm not gonna exit my position. Because I'm not gonna exit my position. I'm not thinking that we are in some struggle times and there's gonna be a huge market crash. I actually think that I should be investing in AI really heavily. And we're gonna see what's going to happen to this brave new world. If I could pronounce world, that would be great. And yeah, and this is it. I don't know. I don't know. Maybe this is just the beginning of the move like this. Some consolidation and up, some consolidation and up. Here consolidations forward. Yeah, it's we can go. Who knows? Who knows? If we go below here, I think below this point, this previous buyers positions, this can be meaning that we're gonna go into deeper consolidation. Yeah, so I would watch, basically look above and fail and break through of this position, but I'm not doing anything about it. Bitcoin, I have a Bitcoin, and to be honest, I would really like it to move up because it's in a bear market for quite some time. I have leveraged ETFs, which is also not good, and I cannot sell options on those. I actually sold options, covered call on TQQQ on 64 strike, which means maybe I will get my stocks taken away from me, which is not ideal, but this is also it's okay. I mean, I can take the money, I can exchange it, and get filled, get I don't know what's the professional term when your option is exercised, you get exercised or whatever. But covered call is I can see that this strategy is pretty cool. I'd like to have more money to sell covered calls on something that's not leveraged, but yeah, as for now, it is what it is. Let's go back to. Also, I've changed monitor. I hope this is fine because now my monitor is extra wide and I have a little bit troubles like getting it to work with OBS, and yeah. Okay, so let's move to the stock that I want to look into, and this is Tesla stock that I don't really own pretty much nothing. I have like 0.5 half a percent of portfolio in this stock. Why? Because I don't really like their business. I don't understand automotive. I don't understand Elon Musk. I don't understand why Tesla is so highly valued when I mean electric cars is it's just a car with electric engine. I don't care. And I think there's gonna be like this is the future. I understand that electric car is the future, and why? Because I believe that if I could power my car through the sun, basically, or wind, that's gonna be like the pinnacle of movement. And if I need to fuel my car by gasoline, and they're gonna have some war in Middle East, in Iran, some I don't know, some maritime tract is gonna be closed, and I'm gonna have to pay a bunch of money to drive my shit box. it's not perfect, so I'd rather, fuel it by car, by renewable sources. It's not about the ecology. I mean, I care about it, but it's not about that. It's about having literally you can drive your car and fuel it by sun. I mean, it's awesome. Still, Tesla, I don't really understand electric cars, but this company is pretty great. I mean, the returns since 2012 is staggering 45% per year. This is huge. This is not existent because Tesla wasn't there since 2002, so we're gonna leave it, you know, empty. But if you bought Tesla and the returns are so great and the technology is so great that the market moves it 45% per year. Um, on like of course it's calculated all the years, so some of the years are it's moving down, of course, and some of the years it's moving hugely up. The revenue is steady growing, which can be checked. I don't know, I use like market chameleon or whatever. Okay, oh fuck, if I could write that would be great. Okay, market chameleon. Yeah. And I just do this and I just do, I don't know, this, and there's like bars here that are pretty great in visualizing the how the company generates revenue, since of course it's since like 5 years. And you can check the net income, and as you can see, it's not great because I'm looking for companies that basically do this, and more and more and more and more and more. I don't look companies that, hit a ceiling and they go down or whatever. And also with income, I'd rather see more income, up, up, up. Um, and yeah, I mean, I'm not, it's not like I'm an expert. Probably it's not even that good to, see the companies, but I can see that companies that are returning like seasonally, returning like they don't grow as much in price, they don't grow as much in income and revenue and whatever. It's like the companies that earn a lot of money, they just go up and that's it. There's not much else. If you could check the income of the company and the revenue is growing, and how much basically money it earns, and put it on a chart, you're gonna see that it's just one-to-one correlation. It's nothing else. It's literally could be nothing else. All the other stuff is just imagination trying to predict the market crash. This company is gonna do good because it makes good potato chips. It's all bullshit. It's irrelevant. So yeah, um, money, um, money and money, and that's it. Okay, so as we could see, profitable since 2020, growing but not steady. 24, 25, worsening income. So I just wrote it. Fundamentals: revenue and income 0.5, income forecast 0.5, debt 1, which is not ideal. And let's go through the revenue and income. As you can see, let's pick like 10 years period. The net income is dropping, CFO is good, revenue is good, but return on assets and invested capitals is kind of going down. But it's still, of course, it's still huge. I mean, it's like, 120% since 2016, which is great. But I'd rather see it going up, and that's it. And it can, of course, go up. Okay, the prognostics. Not much to see here, to be honest. It's ebb and flow, right? 20 years, okay, maybe not. Maybe stick to 10. Um, it's going up, so to be honest, that should be 1. I don't know when I picked 0 point half, maybe there were some changes. Maybe I didn't see into the company stock recently, and I just left it since February or January, and I didn't like what I see. But if those average annual growth in next 2 years estimates of CFO um, return on earnings per share and shit like that, it's going up, that means great, and this should be 1. So where is it? Change it. Income forecast is 1. Yeah. Oh yeah, it's here. So seasonal's performance is since 2011, 12 years in the profit, 2 years at a loss. um I've showed you seasonals. I mean, probably it's a good company. I just don't know. I don't like it. I don't like Elon Musk. Maybe I don't really like the business. I don't really like the product. There's only one product, which is automotive Tesla car, and this is it. And I don't know. It's not my thing. I'd rather have the moat of the company be a little bit bigger, and not be so much in regards to famous person, which Elon Musk is. He's a famous person, right? I don't care about the stuff that they talk about him. Is he a genius? Is he is he addicted to some drugs? I don't care about it, but it's just I don't know. It brings the stink to the company. I don't like it. Let's check seasonals. Remind you what does it mean. So 2011, and I've recently, I think I saw that my calculations is not really good. I think I'm not sure, but 14 plus this year, 14 plus 2011 doesn't equal 2026, but let me check. 14, it equals to 2025. I don't know. There was something wrong about it. So, I cannot see any minus years. Why? Let me just go like this. I think it's something is wrong with scaling. Regular? Huh. It's not good. Where's 2011? Well, there's not 2011. Okay, I don't know what I've written 12 and 2 years in the minus. Maybe there are some minus years. Let me check. Hey, there are not. It's not good. Percentage. Oh, okay. I think it figures right now. So 2016 is on a minus, and of course 2022. How could I not think about our bear market? So yeah, this is the seasonal. Let's go back to charts. What happens on Tesla? We've got the sellers here, right? That's okay. And we're dropping from the all-time highs, and as you can see, with a price target, the upside, and percentage of all-time highs. The price target is not really moving down or up, but it's not a buying opportunity. I think it's 4.5%. Price is lower than the upside target, but we are 22% of all-time highs, which can be said that this is an opportunity. But as you can see, Tesla did some huge correctional movements. 2022 it was minus 70, and yeah, minus 65, minus 60. So minus 22 is not really that great opportunity. But if you like dollar cost average your portfolio or whatever, and you don't care about the upside 22% discount, I think it's pretty cool. I'm not gonna buy it. I don't know. I don't like Tesla. It's just personal view. Maybe that's silly, and I shouldn't care about if I do or don't like Tesla. Um, and that's it. I don't know. It's 30 minutes of me talking. Um, yeah, we're up. That's good. Portfolio grew. That's good. And I've picked a lot of stocks, and I try to add to those when I can. When I think the upside, the percentage of all-time highs is a good opportunity, and I also look at the price to sales and price to equity 2 year forward. Tesla. Let's go. And yeah, maybe this is why I don't like Tesla. 120 price to earnings ratio and 9.5 price to sales ratio. Okay, let's check sales. Well, that was pretty good. 2.6. Yeah. So, see you next month. I hope. I hope I'm not gonna be late with creating another episode. So yeah, thank you very much for watching and goodbye, guys.